Hello traders, Gary Wagner here, just about noon in Honolulu, 6 o'clock in New York. It is Tuesday, September 19th, 2017, and this is the Daily Report for Gold and Silver. Nice, moderate upside move in the precious metals, with gold trading up about $3.80, currently trading at $13.1460. We did send out a trade alert this morning, and we will cover that trade in detail as we pull up our first charts on today's report. Silver also trading higher on the day, up 20 cents at $17.36, and the US dollar slightly lower, down 18 points at 91.63. Traders, this morning I did issue a trade recommendation initiating long positions in gold, placing stops under 1307. On today's report, I want to cover in detail the thought process behind that and our upside target now that we could have a definitive conclusion of a wave 4 in place. First off, traders taking that call got in roughly at 13.1470. Market is currently at 13.1410. As we saw this market come down, we did take a stab at it. We were stopped out, and it really was based upon a 38% retracement level, which, of course, as we see, the market continued to drop. But over the last couple of days, we have seen these lows come in roughly at 1308, and this also corresponds to this 50% retracement of the recent rally, and we're saying that the start of the rally begins roughly at 1260. It concludes up at this top just above 1360, and now we have had the market correct 50%. You can also see this blue hash mark here. That represents the Elliott Wave Get series, which allows me to automate the process. I do my Elliott Wave numbering by hand, but I also look at this particular cycle or system to see if it confirms the wave count that I'm currently looking at. And the wave count that we are currently looking at is a simple wave count starting from the initiation or lows that were achieved back in July. That gave us our wave 1. We then had our wave 2. Interestingly enough, our wave 3 was a 1.618 extension of wave 1. Wave 2 was a 23% retracement of wave 1. And so now, if in fact this price point holds, we would then say with certainty that we had then a 50% correction of wave 3 before resuming to the upside to conclude with our fifth wave. That was the second parameter that we saw. So we had Fibonacci, we had Elliott Wave, and then lastly candlesticks that we typically use as a trigger. We're entering a little bit early, but what we are seeing this market form is a pattern called a piercing line. It needs to close at or above the midpoint, so we're just shy of the midpoint. And typically, on this particular pattern, you would like to see some sort of confirmation. Of course, we have not got the confirmation yet. That would be a green candle with a higher high and a higher low than the previous candle. And the reason that I took a stab at it before we got confirmation is because we did line up with Elliott Wave. We did line up with Fibonacci, and if we do get that confirming candle, we would already see the market go to somewhere around 1320, and I wanted to get us in at a better price point. As I said, market's currently trading at 1314 and change, and we have the FOMC meeting, which is set to get underway today and conclude tomorrow. My recommendation is to maintain our current long position and to maintain our current stop level below 1307. And for those of you that trade silver, we also had some similar signs we got for our gold count as well as our fib retracement. We had a wave 3 conclude at the top as the market hit 1830. The retracement at this point takes us to a 38% retracement level of this entire move here. So it does line up in that way. We can see that here. And in terms of a straight candlestick pattern, we have a bullish harami. That is what is formed there. So if in fact we do see a bottom form in gold, we will also see a bottom form in silver. And traders, as far as U.S. equities are concerned, we are still looking at a risk-on environment with the Dow Jones Industrial Average once again closing at a new all-time record high. The indices as a whole did advance. The composite up about 6 points at 64.61, and the Standard & Poor's, as you can see, closed up 2.78 points at 25.06. And traders, the dollar continues to trade in a highly consolidated and congested trading area, defined on the high at 94 and the low at 91. It still does have a downward bias, even with this most recent pop we've experienced in the market. As you can see, we're trading well below 92 on the dollar index. Traders, we sent out a special trade alert as this market went to yet the next Fibonacci level, which is a 50% retracement. We had the first beginnings of a piercing line and also a conclusion of a fourth wave in our Elliott wave count. When all three come together, of course, that gives us a high probability that we will see an effective pivot and reversal from the recent downside pressure. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.